wanted to say thanks for everyone for coming out. It's wonderful to have you here for our Ask the Expert webinar series. My name's Renee Brown. I know we've all met before. I'm with Remax Real Estate, and I'm going to be your host and your questionnaire for today. Introduce our expert today. Our beautiful Megan Wendell is here. And just to give you guys a little bit of information on Megan, she's a seasoned mortgage broker with the Mortgage Minds Inc. and has been in the industry since 2015. With years of expertise in the field, Megan has become known for her expertise, her professionalism, and outstanding customer service. What sets Megan apart from other brokers is her genuine empathy and care for her clients, which she really does. I've seen it personally and for my family as well. She goes that extra mile to understand their unique needs and concerns and strives to find the best possible solution to achieve their home ownership goals. Megan's network of professionals is a testimonial to her commitment to staying up to date with industry trends and changes, and her desire to provide her clients with the best possible service. With her extensive network, Megan is able to offer her clients a wealth of knowledge and experience to help guide them through often a complex world of home financing. And that is why we're here today, because we want to find out the 3 hacks on how to get approved for a mortgage in 2023. So Megan, welcome.
Thank you so much for what a wonderful welcome. I am so incredibly honored to be here today, and I'm just going to dive right into things because I know we're kind of tight for time. We're here to discuss the 3 hacks for getting approved for a mortgage. Those 3 hacks start out with number 1, improve your credit score. So your credit is the foundation of how a lender assesses your credit worthiness and your risk assessment when applying for a mortgage. Ways that you can improve your credit would be, number 1, pay your bills on time. That goes for cell phone bills and utility bills as well, not just credit cards. Number 2 is reduce your credit balances. So if you have a credit card, say with $1,000 limit, if you can keep that amount that you're utilizing to up to 30%, so up to that $300 limit, that would be ideal. Try and keep to 30% or lower. Again, number 3 in ways to improve your credit is check your credit score regularly and check your credit report for errors. Now, it doesn't happen very often, but sometimes there are such things as errors or fraudulent activity that does hinder your ability to be able to qualify for a mortgage. If we can learn about those before you go in to apply, it's far easier and far more timely to be able to address those issues. And number 4 is one thing that most people don't actually think about, but hold on to old credit accounts. So ones that you've had for a long period of time. Part of what makes up your credit score is your available credit that you have. So old credit cards that you have, keep them active, keep them in place, don't shut them down, because it will help improve your credit score. So that's hack number 1. Hack number 2 is save for a down payment. By far, the most effective way to be able to get approved for a mortgage in the down payment portion of your application is by saving. There are products available out there for a borrowed down payment or a gifted down payment from family, but it always looks best when you've saved for yourself. Certain questions I get quite frequently is, what can you use for down payment funds? So RRSPs, TFSAs, savings that you've built up over time, preferably that have been in your account for 90 days or longer. But other things that people don't actually think about is like an income tax return. You can absolutely use those funds, or bonuses from work. You can use those funds for your down payment as well. And then the not so fun side of savings is budgeting. So no one likes to do the budgeting portion of it. It's not a good time to analyze what you spent your money on and where it's all going, but it really is an effective way to be able to, assess what you've got and how to be able to make more from what you've got in terms of savings. And last but not least is the pre-approval side of things. So it is so important when you're shopping for a new home to be able to go into that process with an an educated amount in your head, knowing exactly what you can qualify for. So the interesting part about this is there's kind of two terminologies that are out there. One is pre-approval and the other is pre-qualification. So I'm going to explain the difference. A pre-qualification is when we have a phone call with you, we have some discussion around what your income is, maybe what your credit history has been like, what you got saved for a down payment, but that's just it. It's just a discussion. A pre-approval would take you through the entire application process, including collecting documentation and pulling your credit. That pre-approval is really the bones of what the shopping process is for you. You want to be able to have that pre-approval because then you know before you even get into the shopping side of things or before you're putting an offer on the table that you are solid in that amount that you'll be able to afford. You can do a pre-approval with either a bank or a mortgage broker like myself. These are both really great avenues to do this. I'm going to talk a little bit about the differences though. With a bank, they are really great at what they do and the products that they sell. It is a product that is being sold by the banks. Their personnel knows the criteria back and forth as to what they are able to offer, but you are being forced to fit into that criteria. With a mortgage broker, it's kind of a reverse engineering. We take a look at you and your specific needs. We take a look at your income, your savings. Sometimes there's different bits and pieces to your application that make you unique. And every application, there's something different on it, to be perfectly honest with you. And so we take a look at that and then we try and find the bank that fits your unique needs. So we shop around. Quite often I get asked, well, what's the fee? How does this work? Typically, I don't get paid by clients. I get paid by the banks to bring them business. That means that I can look out for your best interest throughout the process and guide you with the best possible solution that there is. So hopefully those 3 hacks, improving your credit score, saving for a down payment, and getting a full pre-approval, underwritten pre-approval in place will help you get approved for that mortgage this spring.